Hello, everyone. Thank you so much for attending this presentation. My name is Sunwook Jin, a certified financial planner with Redwood Financial Network. Today, we're going to be talking about the basics of a Social Security. Now, my goal is to help you understand the key points of Social Security benefits. The information that we're going to cover should help you be aware of your options and what to consider about the timing of receiving your benefits. I will also provide resources for additional information. And best of all, we'll be having a short quiz at the end. And all of this is designed to help you make informed decisions about Social Security benefits. Ready to get started? Here are the general areas that we're going to cover today. Thinking about Social Security, and then Social Security benefits, and we'll finish up with some quizzes. Now, let's go over some information about Social Security. When you think about Social Security, what comes to mind? Here are some common questions everyone has. Will it be around when I retire? When can I start taking benefits? How can I maximize my benefits? The fact is, a lot of folks like yourselves don't know the answers to those questions. Now, a lot of people don't know the basic facts about Social Security. Now, according to a recent survey, less than 40% of the people know what their full retirement age is. 40% aren't sure of how much their monthly Social Security benefit would be. Workers within 10 years of retirement overestimate their monthly retirement benefit by almost 30%. While attending this presentation is a good way to learn the basics, and at some point, you'll want to check out this website for more comprehensive information, www.ssa.gov/planners. Now, if you take just one note today, write this website down. The site has numerous links to helpful pages within the site, including calculators, publications, and life expectancy estimates. Okay, let's address probably the biggest question on most people's minds today. Will Social Security still be around when I retire? According to a recent Gallup poll, 73% of people worry about it in a great deal or fair amount. So what's really happening with Social Security? Social Security benefits are considered as a pay-as-you-go system. This means that Social Security taxes collected from today's workers goes to pay today's retirees. For many years, more workers paid in taxes than the system needed to pay out to retirees at the same time. Now, more money came in than went out, and excess started to accumulate in a trust fund that reached $2.83 trillion at the beginning of 2023. But now, due to mostly to the larger number of baby boomers who will continue to retire over the next several years, the workers to retire ratio has started to shift. Soon, we'll reach a point where there is not enough money coming into the system to pay out to all the people claiming benefits. To make up for this shortfall, the Social Security Administration will begin pooling money from the trust fund. The Social Security Administration projects that the current trust fund balances will only last until 2035. Once it's depleted, benefits can only be paid directly from Social Security taxes collected from the current workforce. Now, the projections show that will only generate about 75% of what's needed to pay all the benefits. The Social Security Board of Trustees believes the most likely adjustment will come in the form of a reduction in benefits or an increase in taxes, or some combination of both. But Social Security will not go away. Now let's go over Social Security benefits. When you retire, the cost of basic necessities as well as services you enjoy will continue to rise. Here are some hypothetical examples to consider. If you were born in 1955, the full retirement age is at 66 plus 2 months. And if you were born in 1960 and later, age 67 is a full retirement age. Before we move ahead, I want to take a quick timeout and call out something very important. You'll hear me return to this important point several times during this presentation. Here it is. Social Security should not be considered as your primary source of retirement income. It's important to save as early and as much as you can in a 401k or individual retirement account to help meet all of your retirement income needs. Now, more on this later. If you file an age other than your full retirement age, your benefit amount will be reduced or increased. Filing earlier gives you a reduced benefit. Filing later gives you an increased benefit. For someone with a full retirement age of 67, here's what you can expect based on the age you actually file for benefits. So as an example, starting at age 62, you'll get a 70% of the full retirement age, compared to at age 70, you'll get 124% of your full retirement age of 67. As you will notice, delaying your benefits each additional year results in a significant increase, which is about 8% a year once you hit your full retirement age of 67. Now, everyone's situation is unique, so it is important to look closely at the trade-offs before making your decision. Here are some reasons you might want to claim benefits earlier. You need the money to help pay for living expenses. You cannot work longer due to health reasons. You have caregiving responsibilities for a family member, or you simply lost your job. Now, here are some reasons you might want to claim benefits later, because you don't need the money right now. You have income from other sources to tide you over, such as pension, 401k, or IRAs. Now, you believe you have a longer life expectancy during which higher payments will be helpful. You plan to work at some level during retirement, or you like the idea of getting higher benefits over the long term. Now, let's take a moment to talk about the money you receive from Social Security. According to the Social Security Administration, the average retired family receives about 38% of their income from Social Security benefits. The amount of benefit income you receive may be higher or lower than average, but it's likely that it will be your only income stream that adjusts most years for inflation. For an example, in 2024, retiree benefits increased by 3.2%, known as a cost of living adjustment, or COLA. It's backed by the United States of America and will pay you for as long as you live. Isn't that pretty cool, right? Now, let's take a look at the taxation of your benefits. The Social Security Administration does tax your benefits. However, it depends on your combined income, which is the sum of your adjusted gross income from your tax return plus non-taxable interest plus 1/2 of your Social Security benefits. Here are the current taxable amounts for individuals and those for filing a joint return. If you plan on working while receiving benefits, let's talk about that. You can definitely receive benefits while you're still working. Now, that's the good news. The bad news is that there is a limit to the amount you can earn before your benefit is reduced. For 2024, that limit is $22,320, and that amount can be adjusted each year for inflation. The other good news is that the limit applies only up to full retirement age. So once you reach your full retirement age, it goes away entirely. The reduction is $1 for every $2 you earn over the limit. Here's an example of someone who earns $24,000 while receiving benefits. In this example, there are $1,680 over the limit. The benefit then would be reduced by $840, which is $1,680 divided by 2. The limit for the year in which you reach your full retirement age is currently $59,520. So the reduction for that year is $1 for every $3 in earnings. Here's an example. Hypothetical income in 2024 was $65,000 minus the limit of $59,520, which is $5,480 over the limit, but then it would be reduced by third, which is $1,826.67. After you reach full retirement age, then there is no limit and no benefit reduction if you continue to work. When it comes to planning ahead for Social Security, there's a lot to know and understand, and many details are bound to change over time. I have 3 tips to help you stay on top of Social Security and prepare yourself to make the best decisions for your financial future. Continue to increase your knowledge, keep a big picture perspective, and then consider working with a financial advisor. Be sure to check out these websites you can access to help increase your knowledge about Social Security. According to the Social Security Administration, the Social Security benefits will replace about 40% of an average employee's pre-retirement income after retirement. This replacement percentage will be lower for people in upper income brackets and higher for people in lower income brackets. In addition, most financial advisors say that the typical person will need about 75 to 80% of their pre-retirement earnings to comfortably maintain their pre-retirement standard of living. That means that Social Security will provide about half of what the average person will need. How can you make up the difference? Here are some things you can consider working with the financial service professionals. Guidance and advice on budgeting, debt management, and other key financial goals. Personal one-on-one advice that focuses on your unique situation. Educate you on the different types of investments. Help you determine how much investment risk you're comfortable with, and help you match your financial goals with the right investments. Now, let's take a short quiz to test your knowledge. Ready for your first question? On average, what percentage of income does Social Security currently replace? That's right, 40%. Because the Social Security is only intended to provide a portion of your retirement income. Many experts suggest that you'll need to replace 70 to 90% of your income to live comfortably in retirement. Careful retirement planning is necessary to fill in the gap not covered by Social Security. In 2024, the average monthly Social Security benefit was the answer is B, $1,782. Social Security benefits are calculated based on your date of birth, type of benefit you apply for, and most importantly, your lifetime earnings. In addition, benefits receive a cost of living increase in most years to allow for inflation. As an example, in 2024, the maximum benefit received by a worker retiring at full retirement age is $3,822. If you were born after 1959, at what age are you scheduled to receive your full Social Security benefit? That's right, C, 67. Your full retirement age is when you're eligible to receive your full Social Security benefit. The year you were born determines your full retirement age. You can start taking it as early as 62, although your benefit will be significantly reduced. Or you can delay it and wait until, say, age 70 and get a significantly higher benefit. Now, are your Social Security benefits taxed? The answer is B, maybe. Whether or not you are taxed on your Social Security benefit depends on your income from other sources. Now, up to 85% of your benefits is subject to taxation, but the actual percentage taxed will vary according to your total income. Thank you for watching, and if you found this video helpful, hit the subscribe button for more tips on retirement planning and financial confidence.